I'm Greg Hunter. Welcome to USAWatchdog.com. Thank you for joining us today. And I have one of my old friends and a smart guy. Listen, I tell him this all the time. There's a lot of friends I have, and I wouldn't put them on my site. But he's a friend of mine, and he's awful smart, and he's probably right. I can't tell you how many times hey, this is going to happen tomorrow in the markets. Really? He said, why? Oh, because you're usually right. 7 or 8 times out of 10. I mean, I don't have it exact, but it's way more than 50-50. Of course, there you go. That's my kind of a stumbling, kind of a clumsy introduction for Gregory Mannarino at TradersChoice.net. Gregory Mannarino, thanks for joining us today on USAWatchdog.com.
Great to be back, Greg. Thanks for having me again.
I know you're laughing, but I'm just kind of revealing to people we talk 4 or 5 times a week, sometimes 4 or 5 times a day. And I know the market, I was telling you about the market, and wow, at one point it was down 500 points yesterday. And you're like, yes, you're right, but we ought to talk about the bond market. Still, a big swing in the stock market. What in the heck is going on?
Well, I'll tell you, what people aren't really considering, and it's kind of right in our face, but I think it's being, they don't talk about it. I'm talking about the mainstream financial channels. I refer to them as the Confederacy of Dunces. Basically, it's the financial sector that is taking a major hit because of, again, why? Let's review a little bit here so we can have a little fun. So why would the financial sector be taking a big hit here, pulling stocks with it? Well, for those that are not aware, the financial sector is the largest sector of them all. Now, let's back up a little bit. How many of you out here, with the show of hands, oh, I see you, and okay, remember the European debt crisis? Well, the European debt crisis was never fixed. They kind of just added more debt onto a debt issue. They maxed out their credit card. They found a way to, borrow a little bit more. And that's the main issue that is driving the markets here today. They want people to believe it's political turmoil going on over there. Well, of course, that's playing into this, but it's the fact that some of the largest economies on earth over there in Europe are now once again facing their moment of truth, a debt crisis. There's all kinds of issues going on in their debt market right now. That's affecting financial stocks around the world, subsequently pulling the stock market down. Look, this is not rocket science. All you got to do is avoid watching the mainstream financial channels because they're going to make you, look here. Don't look here. They've been playing up the charade, Greg, and you know this, and I am more than certain that your followers are well aware that we're in some kind of epic global recovery like we've never seen before. It's beautiful. Well, all we've done here, including here in the United States, is borrow ourselves into oblivion. It's fake. And because the debt market is in such a massive bubble around the world, and now we're getting this new debt crisis here in Europe, well, it's going to bleed off around the world now. A major effort is going on here with regard to our central bank, the Federal Reserve, to keep that bond market propped up. I mean, we've watched over the past couple of weeks, Greg, you are more aware of this than I think anybody, the U.S. 10-year yield go from like 3.11, 3.12 to 2.78 in a matter of a couple of weeks. This is an enormous move. And in order for that to happen, an enormous amount of cash would have to be making its way over into the bond market. Again, this is rigged. It is fake.
And then yet we have the dollar. Let me jump in here with you. We have the dollar. I mean, 2 or 3 months ago, we were in the high 80s. We thought, oh, my God, it's going to take a cliff dive. Then all of a sudden, all this money comes rushing out of Europe into America. Martin Armstrong brought this up, too, that we're the prettiest ugly sister. His words, not mine. We're the prettiest ugly sister. The dollar went from 88 or 89 to 94, 95. I mean, it's another massive move while they're dumping all this money into the bond market. What gives?
The only reason why we're the prettiest ugly sister is because we have the world's reserve currency. There's no other reason. We can borrow more than everybody else because of that reason. This is all going to end horribly. Yes, the dollar has been getting stronger. That's also a fly in the ointment, and it's all I've been talking about lately with these markets here. The current administration has made it very plain. They do not want the dollar strong. They want a weaker dollar. The Federal Reserve is going to continue to print cash out of thin air, add it to a digital screen. The dollar will dilute. they have no choice but to do that. They have to keep the bond yields suppressed. How do they do that? They have to, again, print it out of thin air, add it to a digital screen more than likely, and buy bonds. This is how they manage to keep rates where they are. Again, you and I have discussed this. The Fed is not magic. They have no divine inspired power here. They have to get into the market and make it happen. They have to buy bonds. So that no quantitative easing has never ended. It's continuing on as we speak. We also know that world central banks are doing things under the table here, buying each other's debt. There's no doubt that's going on in my mind to try to keep this propped up. Now, this issue in Europe, let me just say this real quick. This issue that's unfolding here in Europe has the potential to be a tsunami, to start this tsunami of a correction to fair value around the world, something I've been talking about, and you too, for a very, very long time. It's not a crash, it's a correction, because everything has been distorted. World central banks are on a buying binge unlike anything that has ever been seen or recorded in world history since the 2008 event, which in my opinion still stands, was the party over moment. This has all been propped up on the back of reinflating bubbles, and these world central banks have been very crafty in doing this. I mean, it's seriously, it's almost, you almost have to admire it in a sick, twisted way that they've managed to reinflate stock market bubbles, reinflate housing bubbles around the world, try to convince the world, and especially here in the United States, because people here, as far as I'm concerned, for the most part, they're dumbed down more than anyone else on the planet. But they've convinced them, or they've convinced people that everything's okay. But here we go again. And I've been saying for the longest time, and so have you, that this European debt crisis was going to rear its ugly head again. Well, here it is. What are they going to do next? Don't know. But we can see what's happening here to the euro. The euro is getting punished. Their bond market is in turmoil. Does this sound familiar to anybody? I mean, I've been yelling.
Well, you're like the lead up to the 2008 crisis, isn't it? I mean, isn't this, crisis?
But it's much worse.
2.0?
Much worse.
Well, when you say it corrects to fair value, what does that mean? Because I hear that and I think, what does that mean? Where's the Dow? Where's the bond market? Where's the dollar? What's the correction going to look like?
That's a beautiful question, Greg. And I
Hit
would
me with
love
what you think.
Where's
the Dow going to end up?
Well, before we go to where the Dow is going to end up, let's try to look at what the bond market is going to do. It's a very, very simple set of dynamics here. So the real question that people need to ask themselves here that are listening to this is, what is the value of all this debt and the derivatives of? What is the real value of it? It's inflated on the back of the world central banks. It will never be paid back here. So what's the true value of it? So what I'm trying to get at is bond yields in a real market would not be anywhere near where they are now. Knowing that,
in other words, they'd be higher, much higher.
Much higher, and it's above my pay grade. Seriously, most people probably on the planet. Nobody here is smart enough to know. Nobody what the true value of debt is. I don't care if you're a Fed president. I don't care if you're running the Fed. I don't care if you're President Donald Trump. You're not smart enough to know what the true value of debt is when world central banks have run amok over the past decade now, printing and buying everything they can in sight just to keep things inflated, and that is inflated a stock market bubble. So going back to your question,
what does the reset look like? What did you say? What is the revision, or everything going back to fair value? What does that look like?
Well, exactly. And this is not just Greg Mannarino saying this anymore. This is prior Fed presidents now here. Alan Greenspan warning of a major spike here with regard to bond yields. It's Wall Street banks warning of this as well. So look, the writing is on the wall, but people just don't see it because they're watching the Confederacy of Dunces and they think everything is just fine. But the fact of the matter is, we are going to face a moment where bonds are going to sell off very rapidly, and no action by world central banks is going to be able to stop the bleeding. That means yields will spike very, very rapidly. When yields spike, you get all this cash leaving the bond market here. Yields are spiking, putting pressure on the stock market. You get a sell-off here in the bond market, a sell-off here in the stock market. As you know, and people who know my work, cash is not going to go to money heaven. It's simply going to look for a place to go. And I think it's going to be, again, it's so simple, into suppressed assets, things that they've been rigging now for an entire decade. How could world debt explode the way it is? And certain assets, I'm referring to gold and silver here, not also be exploding to the upside. These things are priced in dollars. So more dollars? Well, it should make common sense. Should be common sense to everyone. The things that are priced in dollars should go up, like crude oil, although we've seen a pretty big sell-off over the past couple of days. But this is how it's going to play out. It's very, very simple. Nobody knows what the true value of debt is. Therefore, no one could make a really accurate prediction of where the Dow Jones Industrial Average would be. But I can tell you this, probably two-thirds lower than it is today. That's probably fair value for the Dow. Maybe less than that. I mean, I don't know. We have companies right now that are buying back shares of their own stock like we have never seen before. All this cash that got repatriated here to the United States under President Trump, it's being put to work. Yes, companies are using it to buy back shares of their own stock. Now, they're going to try to convince people, oh, we're trying to return cash to our shareholders. This is a joke. Because if they really wanted to return cash to their shareholders, Greg, all they would need to do is raise the dividend. This is a deliberate effort to prop up the market. It's all playing together, period. And there's going to be an awful price to pay for this for people that are on the wrong side of this market. It's very, very sad. And again, maybe, and I'm hoping that your listeners are smart enough to understand where this is going and that they need to start taking action here. They're getting very desperate. And I'm a little bit, honestly, shook up about what I'm seeing here in Europe. All we need is one little spark here to get this thing really going. Is this the spark? Time will tell. But what I do know, Greg, and I'm sure you're aware of this too, and probably most of your listeners, the closing bell just went off, by the way.
We're down. How far are we down?
Let me see. Dow Jones Industrial Average closed down about 400 and... No, I'm sorry, 300. Wow. Okay. We made pretty 390, 370. Let's see where it zeroes out at.
Big swing.
Pretty big swing here. It finished down. The Dow finished down 1.58%. Nasdaq only finished down 0.5%.
But anyway. You're talking about Europe and how you're.
Yeah, Europe is the.
And look at Deutsche Bank. I mean, they're laying off 7,000 people globally.
And we've been hearing this. Yeah, and we've been hearing about this for a while now. But what I want people to understand. And what they really need to think about, why would the financial sector, why would the banks get melted down on the day that we just had here? It's pulling the rest of the market down. Because again, look, these institutions here, first of all, they're not going to lose. They never do. And the whole thing that took place in 2008 was just a show. The Lehman Brothers and the Bear Stearns thing. Bear got absorbed by J.P. Morgan, Lehman Brothers. They had to have a sacrificial lamb here. All this stuff, all the bad stuff here got bought up. Everyone knows it. And this is what they're going to do again. But this is going to be much, much worse. But anyway, going back to what we were talking about, we're going to face a moment here. What does it look like going back? Because I want to elaborate on that a little further. It's important. We are going to have another moment where the credit markets freeze up. No doubt about it. It's going to happen. And maybe, I don't know, this is way too early. I mean, we're just starting to hear about this new debt crisis, which they're trying to tell you is, political turmoil, but they're not telling people the bigger picture. Step back for a moment, everyone. Imagine if you heard this on the mainstream channels, Greg, if they said, okay, everyone, there is political turmoil going on there, but let's step back a moment and let's look at the big picture. It comes down to the debt crisis that was never fixed, that they've managed to magnify by exponents, that is now rearing its ugly head. How they control it, what they attempt to do, will not be in the people's best interest over there. Neither will it be here. So we have to see how this plays out. It's got me a little shook up, but with that said, I want people to understand my perspective, actually even in the shorter term with regard to these crazy markets. Until we start to see bond yields rise here where the Fed can't control it, stocks here in the United States will continue to move higher. That's the truth. When? Because it's going to begin and end in the bond market. Period. Forget this thinking Dow Jones Industrial Average. Really, every asset. What people write to me all the time, they say, well, why should we be watching the bond market? It's very simple. It's the most simple concept on earth, but people don't get it. Every single asset out here derives value from what is happening in the debt market. That's why this guy sitting right here, the first thing I do, I don't even care what stocks are doing. I want to, and I'm a trader. I move money around every day. I placed 2 trades today, both of them profitable. Okay, but how do I come up with these things? Because I look at what's going on in the bond market. I say, okay, bond market, tell me what's going on. Because, again, everything derives value from what's happening in the bond market.
So wait, let me jump in here with you. So with the 10-year Treasury going down, it's off of 3%, down to under 2.78, 2.8%. With it going down, you're not worried. And that's going in the right direction for you.
It's going in the right direction for, again, if they can keep, this is what I've been trying to explain to people. If they're, as long as they are, let me rephrase that, successful in keeping bond yields under the line in the sand here, which is going to move around depending on what the dollar does. Okay, there's a compensatory mechanism, the dollar and the bond markets. It's a little complicated, but it's kind of easy to understand. If the let me go back to that real quick, just to answer the point. If they can keep bond yields suppressed where they are and not crossing that red line that we saw in the sand, 3.1, 3.12, this creates an environment of risk. In other words, investors are going to look for somewhere to put cash, period. They're going to, maybe some of it's going to go into the dollar, which we've been seeing lately, people buying dollars, okay? It's unfortunately not going into the places where it should be going, gold and silver, because these things are not real. There's no price discovery mechanism whatsoever. So in a real market, that's where cash would be going. It's going to go there eventually in a big, big way. But for now, this deliberate environment of risk that is being created means cash is going to make its way into the stock market until they can now no longer rig the bond market. It's going to happen. There's going to be a moment, again, don't listen to me on this. Listen to Alan Greenspan, listen to the Wall Street banks that are saying that there's a potential here for a massive sell-off in the bond market, yield spiking, pressure on stocks. So if you don't listen to Greg Mannarino, listen to these other people.
That's just what Martin Armstrong just said. He was talking bond yields in Europe could go up to 10% overnight. Instantaneous was his word. I'm thinking, with the rigging of the banks, Adobe Prince just wrote another, I think, best-selling book on collusion, which was the, world central banks colluding and all this stuff. How does the little guy protect himself? I've been telling people just own your stuff, own your car, own your house if you can, own your money, own your stuff.
Absolutely.
Because you just don't. When this happens, this is gonna be quick, isn't it? This is gonna. We're given a warning now with the market going up, down, about 500 points in a day, and all this other stuff, and the bond, the 10-year Treasury at 3, and then now it's at 2.8. This is the machinations of it's warning you, and at one point it's gonna go boom, right? It's gonna go quick.
It's gonna go very, very quick. And how do I know that? Well, just look on history. If someone could show me evidence of one bubble that has burst in history that has had a slow burn, because a lot of people keep talking about a slow burn. Well, please enlighten me, because you're a lot smarter than me. I've never seen this before. When bubbles burst, they burst rapidly. Why? Because nobody wants to be the last guy out of the gate. Everyone wants to be first, Be first, be smarter, or cheat. People should know what that's from. That's the the rule of law on Wall Street. So I can promise people that Wall Street's not going to suffer here. It's going to be the regular guy or the regular girl who can only make cash when the market goes in one direction, and that's higher. That's it. It's a joke. It's an absolute joke.
So people should, if they are in the stock market, take some money off the table. Take
exactly.
Some risk management.
What is wrong? I love that you brought that up. Really seriously, what is wrong with taking some cash off the table? If you've been in this market, you've made a lot of profit. So don't let greed, greed is really not as good as Gordon Gekko wants us all to believe. It's the truth. But be happy with what you have. Maybe take some cash off the table. Doesn't mean you have to get completely out of the market. As long as they can control the bond market, that means stocks are going to go higher in this guy's view until they lose control. Are we starting to see this? I don't know yet. It's too soon. This is a new thing. I mean, I can't even believe how they're trying to spin this on the mainstream financial channels. It's laughable to me that they're trying to say, "Oh, this is political turmoil, people. This is political," but they're not telling people what the big picture is. The big picture is Europe is facing another debt crisis. Period. Hello, everyone. Like you didn't know this was coming. If you didn't see this from like a decade ago, there's something wrong with you. That's pretty much it, right?
Just one last thing I wanted to get on this because you haven't talked about this for a while, but I think you're still doing it. I mean, you told people longest time says, listen, take some winnings off the table and go buy yourself some stuff. Go buy your car title. Go get your car. Go get some gold and silver. If you've got enough, pay off your house, pay off your stuff. Just take some money off the table and put it into real stuff. Are you still doing that?
Oh, absolutely. And you got to have some cash on hand too. We spoke about this. You got to have some. Again, what is this whole thing going back to what we just spoke about 10 minutes ago? If the credit markets freeze up, that means you're not getting your cash out of these institutions. It's locked up, done. They had to unlock the credit markets last time. This time, I can't imagine how they're going to be able to do it. It's going to happen again. What are they going to do to unlock the credit markets? Maybe they're going to introduce some new type of a temporary currency that people can trade in or anything in, buy groceries with. I don't know. We've seen this before in the falls of other empires, the Soviet Union. Oh, yeah, you know what? You give us 10 of these and we're going to give you one of these. Something like that has the potential to happen here. But what I think people need to understand, really, is they need to be ready for a worst case scenario. You can never say things are not going to be so bad, because if they're not so bad, well, you're better off. But if you're ready for that worst case scenario and it happens, at least you're kind of ready for it. And I think that, again, the world has been engulfed by world central banks' actions of buying everything, printing cash, distorting the prices of assets beyond belief, that I think anyone who has even a few functioning brain cells and understands these markets, it's off the Richter scale. It's just, even for me, and I study this stuff around the clock. You know that, Greg. Around the clock, I'm thinking about these markets. I'm studying these markets. I'm looking at where cash is going. I'm looking at the bond market. It never leaves my head. So for someone like me, that this is all I do, to not really be able to get a full grip on it, I think that says a lot. But people got to be ready for what may come down the pike here, and keep your eye on Europe right now and their debt market, because there is the potential here for this to create a contagion or a wave that will sweep around the globe. It's got to start somewhere. It may have just started. We'll know soon enough.
Gregory Mannarino, traderschoice.net. The entire site's free. Everything on it's free. You are my buddy, smart guy. Gregory Mannarino, traderschoice.net. Thank you for joining us today on USAWatchdog.com.
Thanks, Greg. Thanks for having me.